Well, speaking of the markets wrestling with how the Fed will move rates going forward, our next guest says the question has shifted from how high and how long, and that changes the narrative from there is no alternative to saying that bonds are back. Let's bring in Dryden Pence. He's the Chief Investment Officer with Pence Capital Management. It's good to see you, Dryden. Let's just kind of rewind here for a second. And what do you think is going on with the markets here into this Fed speak tomorrow?
Well, I think the markets have probably had this January effect. It's gone up quite a bit. I think people are trying to get their handle around really what's going to happen with the Fed. And is it going to be 25, 25, 25 or 25 and 25? When do we hit the pause button? Because that's going to spell a big difference for earnings going forward.
Right. So when do we hit the pause button? Was that just shifted out for you as far as you're concerned?
I think that we're probably, the pause button is shifted out probably to March or May, and then it's a very long pause, not a short pause. And that's bringing us back to the asset allocation narrative.
I look at your stock picks, Dryden, and they interest me. Raytheon, Lockheed, two defense companies, ExxonMobil and Chevron, two big multinational oil companies. Those feel like 2022 style picks. Am I wrong?
Well, you still have a war going on in Ukraine, and you have the folks in Europe and NATO always going to a 2%. You're going from 9 countries to 19 countries, spending a lot of money. And due to what they have to spend that on, it really falls right into Lockheed Martin and Raytheon. The war's not over, and they're going to have to replenish inventories. And then for fuel prices, oil's going to probably stay north of 80 for an extended period of time. And companies make a lot of money at that point.
Well, one of them made $55 billion in the most recent quarter. That's pretty nice money. I guess the impetus for my question is that a lot of the bigger movers have been less, so far this year, have been less defensive choices than those.
Well, I think that what we're going to see is so far this year, you're having this recovery activity. Everybody's really glad to be done with 2022. But the narrative for both asset allocation and everything else is changing a little bit. You know, we see that this first part of the year is going to continue to be volatile. Markets go up and down. It's been great so far, but we think that it's still important to maintain some conservatism in this, because I don't think the inflation story is completely over with.
Finally, Dryden, just going back to the energy, because a couple of your big picks here are Exxon and Chevron. I mean, the oil price has not been behaving well lately. And why do you think that is? And does that worry you that there could be more downside?
Well, I think oil prices are probably going to firm up because you take a look at China coming back online. They're a huge consumer of things. And then again, you've got overall this whole issue of T.I.N.A versus what we call B.A.B.Y. There is no alternative, and then turning into the idea that bonds are back, y'all.
Baby.
Baby. Bonds are back, y'all. T.I.N.A baby.
Bonds are back, y'all.
All right.
Thanks, Dryden. We appreciate it today.